Let's decode the market action with Sudeep Shah, the technical expert joining us from SBI Securities. Sudeep, hi, good to be speaking with you. What do you make of the market setup? Because after that big run-up that we have seen for the last 3 consecutive sessions, we have been hitting fresh record high. Fourth week on the trot, we might be ending in the green. Do you see some sort of topping out for the market right now, or do you see more legs to this?
Good afternoon, Anisha. Anisha, see what we are witnessing in the markets is that overall the indices are in uptrend, but it are these global cues like the rising dollar index. We have been witnessing the US 10 bond yields also rising in the last few sessions, and the inflation was come higher than expected. Now all these have led to some kind of resistance at higher levels if we see into the global equity markets now. So overall, I feel the markets might consolidate here at these levels, and it's okay if they consolidate, because given the kind of up move that we have witnessed from 21,800 right up to 22,700, if the markets consolidate here, it would be a nice thing. And I guess going forward now, 22,450, 22,500 will act as a strong base, and till this zone holds 22,450, 22,500 zone, we could see this move extending up to 22,950, 23,000 in the next two sessions. So overall, we are constructive about the markets, given the way the mid caps and the overall market price shaped up. So buy on dips and buy on selective stocks is what we feel would be the key going forward.
Bit of a consolidation would not necessarily be bad news. That's the word coming in. But what are your own recommendations right now, Sudeep? What charts look interesting?
Anisha, there are a couple of charts which are interesting now. If you see, case in point, Aditya Birla Capital, the stock was consolidating in a symmetrical triangle since 8 to 9 months, and I guess early April we have seen a breakout above 185, 190 levels, and since then all the dips have been bought. And last 5-6 sessions, if you see, the stock was consolidating between 200 and 205. We have seen a volume-based breakout here and a rise in open interest also. So I feel Aditya Birla Capital from a medium-term perspective can be bought with a 200 stop loss on the downside and 220 target on the upside. The second stock that we like is MCX. Now, if you see MCX, the stock was in an uptrend since June 2020. It faced minor retracement in the month of March, I guess towards the end of March, and post then again it is trending on the upside and the momentum is picking up. The stock has crossed its intermediate swing highs of 3,800, 3,850, which were there in Feb and March. So I guess the trend is quite strong, and MCX can be bought with a stop loss of 3,980 on the downside and a target of 4,150, 4,200 on the upside.
So that's the take coming in on the top bets right now. What looks good within pharma? Because a lot of these smaller names are actually perking up. Not sure do you track the likes of Entero, etc., because their recent listing, the time horizon might not be enough. But Newland Labs, Concord Biotech, all of these names are doing quite well. Any mid-cap, small-cap pharma name that is coming up on your radar?
Yeah, one such stock, this Concord Biotech, which you just mentioned, that stock is looking good now. It has consolidated since last 3.5 months between 1550 and 1350 on the downside, and today we have seen a breakout. So I feel overall the kind of consolidation we have seen and the kind of the volume-based breakout that we are witnessing today, this stock could do well in the coming few weeks. So overall here, this stock, if someone is holding this, can continue to hold this with a 1540 stop loss on the downside and 1800, 1850 kind of targets on the upside.
That's the view coming in on Concord Bio. Thanks so much, Sudeep, for making time speaking with us. But
if you like this video, then like, share and subscribe to ET Now.